love the channel and find it useful in becoming a happy retiree. Subscribe today. Paul joins us from Roswell. Paul, what's going on? How can I help?
Hey, good morning, Russ. Before I forget, I want to wish you and your family a safe trip to Michigan.
Oh, thank you. You've been listening, so I appreciate that. I'm hoping for cooler weather.
Well, anyway, you have a safe trip. The question I have, I know you were talking about MLPs, and I used to have some, but they became so volatile, I got rid of them. And I have quite a few telecommunications, specifically AT&T and Verizon. And even T-Mobile pays a above-average standard dividend. My question is on Sprint, because I also have Sprint, and I'm getting a little anxious with them. They don't pay the dividend. Their financials are probably the weakest among the four. What's your thought on Sprint long-term? Do you think they'll be taken over? Do you think there's any interest in being taken over? Well,
so here's my thought. I think that you're going to get, it wouldn't surprise me, first of all, Paul, if you think about this trend that we've seen in the last, really it's been a multi-decade trend. It seems even more evident today is this, and I've written about this, called the shrinking stock market, right? The Wilshire 5000 that used to be 5,000 stocks, aptly named in the 70s, today has more like 3,000. And why? Well, it's because and this is an example within the telecom space that you're talking about or asking about. What happened to what's going to happen to Time Warner? Well, it's not going away. But it's getting eaten by AT&T. Well, what's happening to Yahoo? It's not going away. Yahoo's getting eaten or taken over by Verizon. So if you and that's really in the telecom space, right? It's a capital intensive business to be able to get enough towers and data out there in order to service the population and service not only calls but now more data than ever, right? These companies are not going to be able to survive long term if they aren't doing something that's progressive, that is content related, that's understanding the consumer. So the reason I think long term AT&T is still okay and Verizon's still okay is that they have this other piece to the business, and they're evolving, and they're not just wireline businesses that have gone now to wireless businesses to just data, but now they're understanding content. And in the case of Verizon and Yahoo, they're understanding the consumer. So the Yahoo acquisition for a Verizon, I think makes a lot of sense because it's understanding the advertising of the consumer, and Yahoo's giving them the ability to be in that business, which is extraordinarily important as mobile advertising continues to be a pervasive part of the economy, right? And now Verizon with a Yahoo will have more ability to do that. So I think longer term, that's the model that these old telecom companies need to evolve into. So I'm a believer in that relative to a company like a Sprint. They've got to do the same thing. Either they're going to get acquired because they can't just stay this old line business forever in the rapidly changing digital economy that we live in. So my answer here is that I've got to see a company, and all of these companies have to evolve. So if it's not going to evolve along with its peers, AT&T, Verizon, then it's not something that I want to own. The other thought is that you've got these really relatively high dividends, right? You've got over a 5% dividend for AT&T and Verizon. They both pay about 5.1%. It's right now, I'd say that there's some comfort in that dividend despite the stock prices actually going down this year. So if you look over the last or year to date, AT&T is down about 11, Verizon's down 16, which is a big percentage, but it continues to pay a pretty healthy dividend. At least there's a little bit of a consolation there. These are businesses that are just in the middle of a giant evolution, and they're trying to evolve. Ironically, and I don't know if it's because this prompted the call or not, but this week was the 10th anniversary of the iPhone.
Yes.
I mean, think of what has happened just in 10 short years. 10 years ago in a couple weeks, we didn't even have an iPhone. Wasn't even around. Today, that's what we use in America. And I remember looking back at web statistics on who visits the website? Google Analytics shows you more and more data about who visits. Well, it used to be 95% desktop when I would look at statistics, and then it was 70%, and then it's 50%. And I looked the other day, it was something like 10% of the folks that read the stories on wesmoss.com are on a desktop. 10%. The other 90% are either on a smartphone or a tablet. So it's just, and that's all happened in this tiny period of time. The technology is just so rapidly evolving. So if you're not staying with that technological change, mobile advertising, then I think as a company, you've got some real problems. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.